Hello guys, welcome to Wall Street Made Easy. So today I'll be running my analysis on Crash and Boom. Please, if you are new here, do well to follow me and subscribe to follow me on Instagram and subscribe to my YouTube channel. And if you find this content helpful, please like. Alright, so let's just go straight to the matter of today. So here is my Crash and Boom. People ask, how do you get those pin bar entries for Crash and Boom? Like, it's Crash and Boom, how do you expect to get those entries? But I'm going to show you simple steps on what I do. So first of all, I go to a large time frame where I can see the whole picture. You understand? I can get the whole picture of what this is about. First of all, I switch to my bigger time frame. What is happening? Give me a minute. So yeah, first of all, I switch to a bigger time frame. And then looking at this time frame, you're gonna see that made an impulse to the upside, Boom made an impulse to the upside, and then to the downside, and then another impulse to the upside, making from here, so here, our new range to keep an eye on. So this is a new range from this point to this point is our new range. So now what do we do now we have a new range? We'll look for the 50% of the new range, which is from here to here. Sorry, my flip looks messy, so let me go ahead and clear some of this. I usually clear this each time I come on here to analyze. So remember, if you're seeing this for the first time, please follow me on Instagram and like my YouTube videos too, just to show appreciation. If it's helpful, it's definitely going to be helpful to you. So you see what happened? This was a new range, remember, from here to from the beginning of the Fibonacci to the end of the Fibonacci. This is the 50%. What happened during the 50%? If you see, market just came and tapped into the 50% with this green wick here. This green wick tapped into the 50% of the market. And then what happened after that? There was no follow through. A follow through is that it's supposed to break a lower high that created this low. The lower high that created this higher low. It's supposed to break it to the upside, at least after touching here. It's supposed to go create, like, it's supposed to move upwards again, but nothing happened there, so there was no follow through. So now let's zoom in a little bit to our smaller time frame, so we can get a smaller picture of what happened around there. Alright, going to the small time frame. Remember, this is our new range is out here. From here to here is our new range, and this is the midpoint of our new range. So what happened? Tapped into the new range, didn't create any break of structure. This is the simplest way you can analyze Boom. It tapped into it, didn't create any follow through, and then there was a crash downwards. After this crash, it took out the point that was like going to be a liquidity point, because I really deal with the 50% of range, any range formed, whether the range is in the small time frame or the big time frame. I can teach you guys how to spot out range. If you need a video on how to spot our range, you can hit me up on Instagram and I'll drop something here on how to spot the range, because the range is going to really help you. You know when the range is not holding and when the range is going to hold. So like this now, this range failed to hold in the 50%. So as it failed to hold here, this was the last liquidity point to make the range. Like this point was supposed to drive up and break this point here, but you see what happened after it cleared this point. Remember, we are in the 50% of the range and it has come to the discount of the whole price, but yet there was no follow through. It didn't break this high, so we're going to consider this market a bearish market. Like the bears are going to continue. So now how do we enter this market, knowing that this is no more, knowing that this is not in any position to buy? Let's check the 2 hours. Knowing that this is not in any position to buy anymore, how are we going to follow up this trade? Well, I would say after this, you shouldn't think of entering any trade anymore. Like as far as you've not seen any break of structure here, like this high has not been taken out. So since this was not able to take out this, that means this is weak. This is a weak low and it should be taken out. This is a weak low, it should be taken out. So what happened after this was taken out? You see, this is now a new range. This is how to spot a range. As this was taken out, from here to here is now our new range. So anything from the middle of this, from the midpoint of this range, from here, this is our new range here. I'm gonna delete that out immediately after I'm done. This is just to clarify you on the range we are working with. From here to here is our new range. So now with this new range, we know that anything in the middle of this new range is where the market has to react from for the second time. So now marking the 50% of the range, you see what happens when it went inside. It went inside of the range, created a higher high, higher low, higher high, and then there was kind of like liquidity here. It didn't break immediately, it just stopped and then went up and then broke. So we'll just count everything here as a break of structure. This is a break of structure. Break of structure here. You see how we don't go around calling different points break of structure. We just we know the exact point that broke structure. So now this is our new range. I just drew the new range that is from here to here, our new range. In a range, there's internal liquidity and there's external range liquidity. So after creating a range, it has to come to take the internal range, and then after taking the internal range, it goes back down to take the external range. So this is what happened here. It took the internal range and then broke this structure and then went down to take the external range. Coming back up, this point that could not break immediately is now a liquidity zone. So anything that sweeps that point and then creates any break of structure is our strong point to look out for. I'm not giving entries now, and I'm just showing you liquidity and how liquidity drives the market and how the market moves. So I'll be using dotted lines to draw my liquidity point. You see how it came back upwards to clear the liquidity and then move downwards. This failed to break this. You see, it failed to break, so it was taken out immediately. So please like and share if you found this helpful. And about this other part of the market, I'll drop a new video soon on how I get my entries precisely. Please like and subscribe. Let's get this market. Bye.